Well, the Reserve Bank has again hiked the official cash rate by 50 basis points to 5.25% in a move that seems to have come as a surprise to analysts and the market. So joining us now is Infometrics principal economist Brad Olson. And Brad, why has the Reserve Bank gone for 50 basis points this time?
Well, what you've seen is that the Reserve Bank since the start of 2023 has been talking a big game on inflation. The numbers haven't moved much. At the end of last year, inflation was still running at 7.2% on an annual basis. The Reserve Bank is not comfortable with that. And so it obviously wanted to back up that big talk with even bigger action. Back in February, they raised interest rates by 50 basis points. The market didn't even blink. There were no changes to mortgage rates at all. And in fact, in recent times, we've actually seen some of those longer dated wholesale interest rates start to pull back. The Reserve Bank had been getting nervous and communicated that with its 50 basis point increase this week, that they were incredibly nervous that that pullback in interest rates could undermine all of their good work. They put a shot across the bows of retail banks, of the markets. They want to see those interest rates remain at the high levels that they are so that we can bring down the temperature of the economy just a bit to bring supply back in line with demand and ensure that we can eventually get inflation under control.
Yeah, it is a fascinating time, Brad. We don't seem to be talking about a soft landing anymore, do we? The Reserve Bank wants a recession. Is that necessary?
Well, I think the difficulty for the Reserve Bank at the moment is that they've done a lot. There's been a huge amount of heavy lifting over the last year and a bit to try and increase interest rates and just turn down the temperature of the economy just a touch. The economy hasn't really been playing ball yet. We've seen that job numbers at the start of this year have continued to rise further and further. Card spending data as well remaining higher, which again is fueling pressure on the economy. And Cyclone Gabrielle has also disrupted further parts of the economy and could well lift inflation and keep it higher there for longer. For the Reserve Bank, they know that they've done a lot of work. They haven't seen the fruits of their efforts yet, and they're waiting for about half of the entire mortgage book to refix onto those higher interest rates this year. That's where you'll start to see a lot more pain starting to come through and less spending able to happen out there in the economy. But for now, the Reserve Bank does want to make it very clear that they are still trying to desperately get inflation under control. They need to ensure that not only inflation itself starts to come down, but that people believe they are on a one-headed mission to ensure that that inflation figure comes back. That's why they're taking such a bold move out into the market.
Yeah, well, it sounds like there's plenty more pain to come in 2023 yet. Brad, thank you.
Thank you.
Well,